Nvidia, the undisputed champion of the AI software boom, just saw its Asian partners, those robot makers, rally by almost 50% in the last 12 months. Why? Because the physical AI revolution, robots, drones, smart factories, is here in 2026, and it's completely reshaping global supply chains. For the last 3 years, the AI hype was all about software and LLMs, making Nvidia's market cap surge past $4.5 trillion. But now, the focus is shifting. Bloomberg's Katia Shabanova reported just days ago that this new wave of physical AI is turning obscure Asian manufacturers into investor darlings. This isn't just a tech story, it's a massive realignment of global capital. So, what does this mean for someone looking to understand where the next wave of innovation and potentially investment opportunity might be forming? Let's dig into the numbers and see. Alright, let's talk about the next big wave in AI, because if you've been following along, the last 3 years have been all about the software, the large language models, the data centers. Think Nvidia, ticker symbol Nvidia, whose market cap just exploded past $4.5 trillion. But what if I told you the spotlight is now shifting? Bloomberg just dropped a report on May 9, 2026, pointing to physical AI as the new investor hotspot. We're talking robots, automation, the stuff you can touch and see making real-world goods. And here's why this matters right now. Global assets linked to the Global Robotics and Automation Index, that's ROBO, have effectively doubled over the past year. That's a massive leap, driven by a surge in adoption across manufacturing, aerospace, and even defense. What this means for someone looking to understand the next big trends in technology and investing is that the game is subtly changing. We're moving beyond just the virtual intelligence. We're integrating it directly into our physical world. Nvidia itself, recognizing this shift, is strategically expanding into physical AI, and guess what? Their Asian partners are absolutely soaring, now supplying roughly 90% of Nvidia's production costs, up from 65% just last year. CEO Jensen Huang has clearly laid out this vision. The lesson here is that the AI boom isn't a singular event, but an evolving narrative, and we're seeing a critical pivot. We're going to dive into what this physical AI actually entails, which companies are at the forefront, and what historical parallels can help us understand this new wave. The initial phase, what Ian King accurately termed the digital brain era in his pivotal April 2, 2026, Bloomberg article, was singularly focused on the foundational components. The intricate AI models, the advanced semiconductor chips, and the sprawling, energy-intensive data centers that fueled the nascent AI revolution. Nvidia, under its well-known ticker Nvidia, epitomized this era, witnessing its market capitalization astonishingly surge past $4.5 trillion as demand for its GPUs exploded. This was fundamentally an era of sophisticated software development, where large language models underwent exponential learning, and cloud infrastructure providers like AWS and Azure expanded at unprecedented rates to support the burgeoning digital ecosystem. However, as Katia Shabanova astutely pointed out in her May 9, 2026, analysis for the Financial Times, the industry's focus is now emphatically shifting towards physical AI. This represents a monumental leap, where artificial intelligence transcends the purely virtual realm and manifests in tangible, real-world applications through advanced robotics. Consider the profound implications. Instead of merely processing abstract data, AI is now actively interacting with and manipulating its environment, autonomously operating complex machinery in modern factories, precision-guided systems in aerospace, and even highly sensitive equipment in defense sectors. We are already witnessing this paradigm shift with industry leaders like Hyundai Motor, whose stock recently surpassed KRW 300,000 for the first time on May 15, 2027, reflecting a tangible robot premium perceived by investors. The global assets linked to the Global Robotics and Automation Index, ROBO, have indeed doubled over the past 12 months, climbing from $5 billion to over $10 billion. This isn't merely about faster computation anymore, it's about intelligent machines constructing intricate components, navigating complex flight paths, and fundamentally making the physical world more efficient and intelligent. The indelible lesson here is that the true evolution of AI isn't solely about accumulating bigger datasets, it's about enabling smarter, autonomous action. And this profound shift inevitably draws our attention to Asia's often unsung yet absolutely critical role as the true architects of physical AI's explosive boom. But here's the often overlooked truth, frequently eclipsed by the flashy announcements from Silicon Valley. While Western giants like Nvidia consistently grab the headlines with their AI software and chip designs, the real foundational wealth, the nuts and bolts powering the physical AI boom, is overwhelmingly being generated in Asia. We're talking about the advanced semiconductor manufacturers and the intricate assembly networks, the silent architects whose technological prowess underpins everything. Consider Taiwan's semiconductor manufacturing company, TSMC, the undisputed foundry king. On April 16, they announced an astounding 58% jump in quarterly profit, marking their fourth consecutive quarter of record-breaking revenue. This isn't just about the A-series chips in your latest iPhone anymore, it's about the incredibly complex AI accelerators. According to a May 3, 2026, Bloomberg analysis, Asian suppliers now account for approximately 90% of Nvidia's total production costs for their H200 and Blackwell series GPUs. This represents a dramatic surge from roughly 65% just last year, highlighting an unprecedented deepening of dependence. This shift underscores the absolutely critical and often irreplaceable role that economies like Taiwan, South Korea, and Japan play as indispensable manufacturing hubs for these physical AI components. It's not just TSMC, companies like Han High Precision Industry, better known as Foxconn, are also making massive strategic moves. Foxconn, under CEO Young Liu, is planning to invest over $2 billion in India by 2027 to significantly expand advanced manufacturing capabilities, initially for iPhones but signaling a broader supply chain diversification for tech giants looking to build out more physical tech, including AI hardware. The undeniable lesson here is that the very backbone of the physical AI revolution is fundamentally Asian, from the highly sophisticated chip foundries churning out 3-nanometer processors to the complex assembly lines in places like Shenzhen and Suzhou. And this profound reliance on Asian manufacturing and innovation is precisely what's powering Nvidia's strategic leap into the robot revolution, enabling them to bring their designs to life on an unimaginable scale. Nvidia's strategic pivot goes far beyond just powering data centers, it's actively orchestrating and driving the entire physical AI ecosystem. As reported by Bloomberg on May 3, 2026, Nvidia's aggressive expansion into physical AI is a primary and undeniable catalyst for the remarkable rally we're witnessing among its key Asian partners. CEO Jensen Huang's visionary leadership has unequivocally shifted focus, now extending squarely to AI-powered robots and intelligent autonomous systems. Consider the profound transformation. Their foundational GPU technology, originally engineered for rendering intricate virtual worlds and hyper-realistic graphics in video games, is now being directly leveraged to provide real-time control and cognitive capabilities to physical machines operating within high-stakes environments like advanced manufacturing facilities and sprawling logistics warehouses. A particularly striking example of this intricate global interconnectedness is evident in their supply chain. Asian suppliers now account for approximately 90% of Nvidia's total production costs, a significant increase from roughly 65% just last year. This monumental shift emphatically underscores the deeply globalized and interdependent nature of this physical AI push. We're observing Nvidia's undisputed leadership in AI processing transition from merely enabling software algorithms to becoming the literal, indispensable brains for autonomous robots across an increasingly diverse array of industries, from optimizing complex, multimodal logistics operations to executing precision industrial automation tasks previously thought impossible. This pivotal move positions Nvidia not just as a software AI enabler, but as the foundational technology provider for the entirety of the emerging physical AI ecosystem. Only last week, South Korea's LG Electronics Incorporated, 066570.ks, saw its stock rally by over 12% following news of new tie-ups and expanded supply chain participation with Nvidia, particularly in advanced robotics components. The undeniable lesson here is that the future of artificial intelligence isn't merely digital, it is profoundly physical, and the global supply chain is becoming ever more deeply integrated and critical. This dramatic and foundational shift naturally leads us to the big question. With all this transformative change in motion, where precisely is the smart money flowing now to capitalize on this physical AI revolution? This shift isn't just theoretical, the money is actively flowing. As Katia Shabanova noted on May 9, 2026, the investor focus has rapidly moved to physical AI as the next major hotspot, a significant departure from the purely software-centric AI boom of the past few years. We're seeing capital reallocated at a remarkable pace. For context, the Robo Global Robotics and Automation Index, under the ticker ROBO, has seen its global assets effectively double in just the last 12 months. This isn't just a minor reallocation, it's a strong vote of confidence from investors who are putting serious money into companies facilitating physical AI adoption across manufacturing, aerospace, and defense. Think about it this way. For years, everyone was chasing the next big software model or GPU for data centers. Now, that investment is morphing into something more tangible. A prime example is TSMC. While not a household name for everyone, Taiwan's semiconductor manufacturing company is a titan in the chip world, and their recent quarterly profit jump of 58% isn't just a fluke. This substantial increase is a concrete indicator of the financial returns being generated by key players in the physical AI supply chain, the companies that actually build the brains and bodies of these smart machines. This isn't about predicting the future, it's about observing where smart money is actively deploying now. The lesson here is that the market is evolving beyond just digital brains, it's looking for the physical powerhouses. The future is tangible. What physical AI means for us. The future isn't just about digital assistants or algorithms, it's about intelligence in motion, as Tanjeff Schatt and Jens Niebuhr of Strategy put it in their March 3, 2026 viewpoint. This physical AI means a future where robots are no longer just simple automated arms on an assembly line. They're increasingly performing complex tasks in our factories, homes, and critical infrastructure, moving beyond simple automation to actually think, see, move, and act in real time, augmenting human workflows, as global XETFs highlighted. Think about it. Autonomous vehicles navigating city streets, drone delivery systems dropping off packages, advanced manufacturing robots collaborating with humans on precision tasks, and even AI-powered defense applications. This isn't science fiction anymore. For instance, a recent report on May 3, 2026, from Bloomberg via Investing.com noted Nvidia's strategic expansion into physical AI as a key driver for its Asian partners. The lesson here is that as the complexity of these physical AI systems grows, so does the demand for highly specialized components and manufacturing capabilities, with Asian powerhouses at the forefront. This shift has profound implications for global supply chains and for anyone considering their financial future. For investors, this signals new opportunities. We're seeing capital flow into robotics companies, specialized sensor manufacturers, and chipmakers like those in Asia powering Nvidia's production. Katia Shabanova noted on May 9, 2026, that physical AI is the next investor hotspot, succeeding the software-centric boom. The true impact? Enhanced productivity across industries, new markets opening up, and a transformed workforce where AI-powered machines and humans collaborate more closely in tangible, physical environments. So, what this all means is that physical AI isn't just another tech trend, it's a fundamental economic realignment. We're seeing a shift from the purely digital AI boom of the past few years to a new era where intelligence is embedded in the physical world, creating tangible products and services. The lesson here is that understanding where these manufacturing and design hubs are, particularly in Asia, becomes absolutely crucial for anyone assessing long-term growth opportunities. It's a new chapter in global industrial power, and it will define the next decade of innovation. Have you noticed more automation or smart robotics showing up in your workplace or daily life recently? What's your take on how this physical AI might change our jobs or industries? Share your thoughts and experiences in the comments below. And if you want to keep breaking down complex financial shifts like this, make sure to hit that subscribe button. If you found this deep dive into physical AI fascinating, then my video on how Taiwan's semiconductor manufacturing company, TSM, became the linchpin of the global tech supply chain is exactly the next thing you should watch.